Oh, welcome to a very special Sharp Talk Rumble exclusive. Yes, we are doing some exclusive things on Rumble on a special Saturday afternoon show. So happy to have you with me today, a little bit past 1 p.m. on the East Coast. And this is kind of an ongoing thing that I've been doing here with a friend of mine, someone who is very savvy and talks a lot about entrepreneurship, but more personal wealth, personal growth. All those things are important to the individual. And I want to bring him back on again to talk about something that most people don't really talk about hardly at all, unless they think like they're going to die or something. And that is trust. He is an entrepreneur. He is a person who's very much about self education, financial literacy. The man himself, Jerome Bell. How are you, sir?
Hey, I'm great. I'm good, Larry. How are you?
I'm doing wonderful. And if you want to check him out, you can check him out by going to megaschool.me/hello. It's on the link is in the description. Also, you can check him out. Now, look, Jerome, when you first brought this to me, I wasn't sure if I wanted to talk about this. And the reason why, to be forward with you, is people think about trust, generally speaking, right? As well, when I die, I'm rich. I put my assets in the trust. And then this way my greedy family members don't pick everything apart because the trust saves me. And that's why I have a trust, because I'm a rich guy with a gazillion dollars in my trust. But you don't think that's necessarily true or the only way, right?
Right. It's a bit backward, actually. A lot of people think, oh, you got to be rich to have a trust. It's
Right.
more like you need to have a trust to get rich.
You have
And
to have a
so,
trust to get rich.
correct,
Okay.
correct.
Okay.
So what it boils down to is that when you have a trust, you can lock in a 5% tax rate,
So you have
regardless
a
of the amount of
trust,
income.
you can lock in a 5% tax rate. So now in most people, right, are paying a whole lot more than 5% tax, right?
Right.
Most people are. So you're saying like for all your income, is that what you mean?
Correct. Correct. Now, how you make income makes all the difference in the world. And most people have somewhat of an understanding of this versus W-2 employment income versus 1099, business income. But
Right.
there's so much more to it than that. But ultimately, what even 1099 business owners don't understand is if they could structure themselves properly with trust, they can pay no more than 5% tax, regardless of the source of income, of business income, and in perpetuity.
So, okay, most people that I know who are business owners, me included, we have more than one entity. Usually it's something like an LLC or an S Corp or something like that. I tend to go with S Corps, but people switch, mix and match whatever thinks appropriate. And then they have themselves too, right? And so depending upon who they're working with, who they're working for, they may say, no, don't sign a deal with me. Sign a deal with my S Corp or sign a deal with my LLC. Are you saying we're signing deals with trusts?
You can. Sign
Okay.
the deal directly with trust, but you probably wouldn't do that for the sake of just another layer of asset protection. So it's
Okay.
basically a both and, as the case may dictate.
All right, so
But
now I'm going to become some savvy, cool political consultant for one of the biggest, people, and they're going to throw me a big check. They're going to throw me, I don't know, 20 grand a month because I'm super wealthy, and they're going to throw all kind of money at me, right? So I'm getting 20 grand a month. Shouldn't I just be a nice 1099 and be happy and put that money in my S corp and then pay
right,
myself the salary that I want? Maybe buy some stuff with the business stuff, right, to cut my taxes. Wouldn't I do that instead?
I like how you put up the quotes, right? It's
Yep.
interesting when you go from being in the gray of the law to the black and white of the law. You go from paying far more than 5%, even with the S corp when it's all said and done, to paying no more than 5% tax,
Okay, wait. You're
no
saying we're
questions asked.
getting out of the gray zone.
Correct.
Okay, you got to help me. How do I get out? Because I'm literally wearing gray. I'm literally in the gray zone constantly. So how do I get out of the gray zone?
Okay, there's really two key concepts. One is jurisdiction of law. In fact, I think I might have sent you a
Oh,
graphic
okay.
about
Yep. Let me put
jurisdiction
that
of
up
law.
now. You did. That one there, right?
Yeah. So this is something that was an eye opener for me.
Go ahead.
You think about how is it that I'm going to say Indian nation because that's what the federal government, that's the language they use for legal
Yeah, the
purposes.
federal language, the federal government still uses Indian. They do not use Native American. They still have a
Right.
Bureau of Indian Affairs. It's true.
Right. Right.
Yep.
So how is now we all know that Indian nations they'll have these casinos
Yep.
even though they're against federal law, and we're like, well, how's that possible? Now, a lot of people know loosely that it's well they're outside the jurisdiction of the federal government, and
Okay.
that's the answer. And so even though you're within the borders of America, it doesn't necessarily mean you're under the same jurisdiction of law. So
Right.
we
Got it.
know about the distinction between federal versus state and even local municipal laws, etc. We know those distinctions and there can be conflicts between them. But
Sure.
above federal law is English common law. That is the
What's above
highest law
federal
of the
law?
land. Above federal law.
Okay. Keep going.
This is
Now you got me intrigued.
yeah. Yeah. And so this is the key concept is that the US Constitution is written under English common law. So
So
the
okay, go
so
ahead.
the yeah. So the federal government does follow English common law, inclusive of the US Constitution, is to be interpreted in the context of English common law. So the federal government in practice does follow English common law. Concrete example,
Okay.
when there's a trust or a treaty between the federal government and Indian nation, how's that adjudicated? In the context of English common law. It couldn't be under the
Okay.
context of the Constitution because they're separate nations. So a trust is literally a contract. It is a three-party contract. So think about a
A
trust fund, baby.
three-party contract.
A three-party. So we know about the two-party contract. It could be
Right.
between you and me, Larry. We both sign
Yep.
on the line. That's a legally
Yep.
binding contract. But a
Yep.
trust is a three-party contract. So we're going to use a trust fund, baby, as an example. People
Okay.
loosely know what that means. So a trust is the creator of the trust, the trustee, and then the beneficiary. So we have a trust fund, baby. That means a parent has $250,000. The child's only 10 years old. The parent would be the creator of the trust. And then who's overseeing the money until the child is of age? Somebody who they literally trust, like a godparent. They would be the trustee.
Oh, I got it. Okay, so if I'm the dad and I want to give my money to my daughter, I need to find somebody else who I trust to do that. So in theory,
Correct.
could that be like an older daughter helps out a younger? So I could have my older daughter be a trustee for my younger daughter, that kind of thing?
Yeah, is your older daughter 18 or above?
She is. Yep, she's an adult.
Yep, that'll work.
Okay, I get it. All right. So I need
Now,
three people for a trust.
correct, because the beneficiary would be your daughter who's a minor.
Got it. Okay. But so can I have it to where one person holds more than one role? So can I be the originator and the trustee, or originator and a beneficiary? Can I mix and match the roles?
Legally, you can, but you don't actually have a trust. And even in the language in the courts, they'll say you don't have you have a trust agreement instead of a trust contract, which means you just created an alter ego. You don't actually have a separate
Oh,
legal entity. And so there's a lot of confusion when people being both the creator or
yep.
grantor and the trustee, or where
So
they're the trustee and
could I create an entity that would be one of those things? So could I create, say, an LLC or an S corp that is a trustee, or can I create an entity that is a beneficiary, or can an entity be the originator, or does it always have to be me, Larry Sharp, human being?
Well, I understand the question, but the point is actually moot for this reason of jurisdiction.
Okay.
A LLC or S corp, C corp doesn't matter. Those are statutory entities, which means they're literally created by the state. I think I jotted that down
Yes.
there. LLCs
It's
and
right there. I
corporations.
see it. It says state, LLC,
Yeah.
and corp. Okay.
Yeah. And therefore, those entities are subject to regulation by state and federal. When you have a properly structured trust where you have three distinct people fulfilling three distinct roles, and particularly and additionally, it's in the jurisdiction of English common law. You are co-equal with the federal government itself in the same way an Indian nation is co-equal with the
So I
federal
actually
government.
don't want an entity to be
Correct.
involved in that trust.
Correct.
Ah, I got it. Okay, hold on. I got a comment here on Rumble. This is Sarge Apone says, with the way New York City laws and courts are, I'm putting everything behind a trust to protect the assets for my wife and kids.
Yep.
So when he does that, right? When Sergeant Apone does that, does he actually want his wife and or kids to be trustees, or does he want them only to be beneficiaries, or some combo?
Yeah, so they would be trustees.
Okay.
Right. So you have the primary trustee, and then you can have successor trustees. They're basically backup trustees.
Got
So
it.
this is a way you can pass down wealth from one generation to another. So Larry, from you to say your daughters, right, is that they're the successor trustee, which means they simply get the keys to the kingdom when you pass on. There's no tax event.
Can you make something special for, like, what happens if I don't pass on, but I get hit by a bus and I'm in a coma?
Then you in the trust contract, you have that stipulation that
Got
the
it.
successor,
Okay.
yeah,
So I don't have to die. I just have to
correct.
have a stipulation as to when they take over. So it
Yep.
could be that I'm in a coma, or it could be that I'm whatever.
Yes.
I'm in a plane accident and they don't find my body. They don't know if I'm gone or not. I'm saying all these horrible things. But yeah, but
Yeah.
any
No.
of those. Okay.
And
All right.
and there's no, and for that reason, when I advise or really refer people to trust providers, it's never cookie cutter. It's never boilerplate, because every situation and every person has their own interest, and that trust contract is going to basically reflect the soul of the person who's setting it
All
up.
right. But we just talked about kind of protecting assets and such. I want to go back to the first piece you said,
Yeah.
which the first piece you said was, you talked about making this and moving this to making wealth. What Sergeant Pone's talking about is protecting wealth he already has. That's
Right.
what I was talking about. But you said that to get wealthy, I need trust. Let's walk down that road.
Okay. I'm a visual guy, so I sent you an image that walks you from LLC through various trusts.
Okay.
And
This one here.
yes, so and I
Okay.
have some numbers to make the math easy, but this
Okay.
is how mathematically you pay no more than 5%. And really it's through a series of interrelated trusts. That's what's
Series.
key.
Okay. Okay.
So you would take your LLC,
Okay.
and then you're going to add another member, which is going to be a business trust. So this is a trust.
So hold on. The LLC is going to, okay, hold, let me go. The LLC though is a state, that's a state entity. But
Correct.
the business trust is not a state entity, correct?
Correct. English common
Okay.
law.
Got it. Okay.
Common law
Now,
trust.
trying to get my head around this. Okay. So LLC is a state entity, but business trust is not.
Correct.
Keep going.
And so right now, a lot of people will have a single member LLC, one owner. You're going to add
Very
another
common.
owner, and the other owner is going to be the business trust itself.
Oh, so I just got a partner.
Yes.
Okay.
Okay.
Does it have to be LLC? Could it be S corp, or you just happen to use LLC? Does it have to be
I
an
happen
LLC?
to use LLC. Yeah.
Okay, but it could be a corporation.
Right.
Okay, got it. Okay.
Now, what's going to happen is the purpose of the business trust is to take in and pay the expenses of all business entities. Okay. Because like you said, people may very easily have multiple LLCs.
Yep.
Okay. So the business trust is going to pay the expenses of all of them. We're going to see that in a moment. The family
So
trust
hold on.
is where
So you're saying that if I have, and I have multiple entities. So if I have multiple entities, do I need to have one business trust per entity, or can the business trust be a member of many entities?
business trust, member of multiple
Got it.
entities.
So
Yeah.
one business trust, multiple entities.
Correct.
Got it. Okay.
And so any profits is going from the business trust to the family trust. The family trust is personal spending.
Okay,
That's the
so hold
family
on. So
estate.
now, if the business trust is a partner in the LLC, does
Yes.
the business trust gain profits or gain a salary? How does the business trust get money?
It's going to come from the LLC.
Okay, but how? Is it profit sharing? Is it a salary? Is it
It's
what
called
how?
the tax term is a K-1 distribution.
Ah, okay. That's what okay, so it's not a salary. The business trust does not get a salary.
Correct.
Okay, got it. So basically, okay, understood. So the entity is putting money into the trust.
Correct.
Okay, got it.
And then, so ultimately, the profits is passed through the business trust to the family trust, and that's where you're doing your personal spending. So when you're going to the grocery store, instead of swiping with your personal debit card, you're going to swipe with the trust debit card.
All right. So then how does the business trust give money to the family trust? Is that a salary?
No, the beneficiary of the business trust is the family trust.
Oh, okay. Okay. That's okay. There's got to be though. Okay, now I got the business trust. The business trust has got to have three people though, right?
Correct.
So I'm one of them, obviously, and my
Yes.
family trust is another. Where's the third?
Third, so what we do, the creator of the trust, these are all going to be irrevocable non-grantor trusts,
They're
which means,
irrevocable. That sounds scary now. Now you're scaring me.
yeah, but it's scary in a good way. Um,
Okay.
it's irrevocable. That means that whoever's creating the trust, they can't take anything out of it. They can't interact with it.
Oh, I see. Okay.
So really, from a practical standpoint, you, Larry, would always be the trustee. And then, of course, you know who your successor trustees are. But the creator of the trust or the grantor of the trust is really a formality, because they're going to, upon signing the trust contract, they're going to immediately revoke themselves in perpetuity. So really, the only one who has control, the only one who has keys to the kingdom, is the trustee.
All right. So I get my Marine Corps buddy who I trust, and I say, hey man, do me a favor. Be the originator of this business trust. And it's
Yep.
called Sharp Business Trust. That's what it's called, right? And my
Yep.
buddy goes, yeah, fine, I'll do it. So he does it. If I pay him, is that illegal? Meaning, if I pay him to do it, I say, do me a favor, man, do it. I'll for your time. I'll pay you $500 for your time.
It was, as far as I know, it's definitely not illegal.
Okay, so I say, hey,
I,
$500, I need your time. Originate this
yeah,
trust for me. He originates the trust. He makes me the trustee,
right,
and he makes my family trust, which is now Sharp Family Trust, right? Because I'm very original,
right,
so I name it that. So I name
right,
it Sharp Family Trust. So I name it that. The Sharp Family Trust becomes the beneficiary. So
correct.
now what I do is all the money that goes into the business trust, I as a trustee decide I want to give X percent or X dollars, whatever it is, to the family trust.
You got it.
So a trust to trust swap or transaction, is that not taxable?
This is something that a trust can do that no physical, natural person or corporation can do. You can distribute 100% of the income to the beneficiary, and then is tax deflected, which simply means that the tax liability is passed on to the beneficiary.
Okay, so the business trust gives money to the family trust, and the business trust pays no tax on it. Only the family trust pays tax on it as income.
Now, we're not going to actually pay taxes on a family trust either. So let me just walk through the numbers, because
Okay.
we get it conceptually. So let's walk through the
Okay.
numbers just as a concrete example. It's all going to come together.
Okay.
Let's say your LLC has $150,000 of revenue.
Okay.
They're going to do a K-1 distribution to the business trust, one
Okay.
of the members of the LLC. And also, all $150,000 is going to do a K-1 distribution to the business trust.
Now that's revenue, not profit.
Correct. Revenue. I'm being very specific.
That's what I'm asking. So
Yeah, that's
the
right.
LLC is going to take all the revenue and give it to the business trust.
Correct.
Does
All
that
right.
mean that the LLC has no profit?
It has the LLC all by itself has no profit, and additionally, it has zero taxable income.
Okay, I'm liking this so far. Keep going.
Okay. The
All right.
business trust has received $150,000 from the LLC, and the business trust is what's paying the expenses of the LLC.
Oh, so then if the LLC has to whatever pay $100 for web services or $1,000 for a contractor, the business trust writes that check to the contractor and to the service provider.
Correct.
Okay, got it. Okay,
So,
I'm with you so far. Okay.
Yep. So in general, anytime you have an expense, that's tax deductible. Okay. So then that leaves you with $100,000 of profit in the business.
Well, I like this
trust.
business model already.
Yeah. Yeah.
You doing $100,000 in revenue and you get $100,000 in profit. Oh, I like that. That's a good business
Right.
model. I want that one.
Right.
Okay, we're doing
And
good so far.
So what the business trust is going to do is they're going to distribute the entire $100,000 to the beneficiary, which is the family trust.
Got it. Okay.
The business
Then
trust
got it. Okay.
is paying zero in taxes because it has
So
zero
far
taxable
LLC
income.
pays zero in taxes because it has no taxable income. Got it.
Right.
Now the business trust also because it only has expenses and that what it gave away. So it also has no taxable income.
Correct.
Got it. Okay. But now I got still $100K at the moment in my family trust.
Correct.
Okay.
Now this is your personal spending. And so now, let's say in a given year, you have $80,000 of personal expenses.
All right. So hold on, be clear. So the family trust literally has a debit card and a checking account.
Right.
So I'm spending money for I'm paying my rent off the family trust.
Yes.
I'm paying my car note
yes.
off the family trust. Okay. All right. Okay. I'm going to ask the question then. Hold on. Do I still want to do things like lease a business car from the business trust? Or do I even want to pay that out of the family trust?
Ultimately, wouldn't really matter.
Okay. But a business expense still goes business trust in general.
Yeah.
Okay. Got it. Good. Okay. So now we're in a family trust and I got to drop $80K for my year of myself. And that's like me buying groceries, paying my rent, whatever I'm doing.
Right.
Got it. Buying my car, going on vacation. I spent 80 grand. Okay. Got it.
That's right. Now the $20,000 remaining, okay, is something that a trust can do that a LLC or corporation cannot do. They can donate 100% of their income to a 501c charity or a charity, like a 501c3, and it's completely tax deductible. So they can donate unlimited to a charity and it'll be all tax deductible. So the $20,000 remaining in this generic example is going to go to a private family foundation. And that's the same type of the word foundation we hear about Bill Gates, the Clintons, Oprah Winfrey, LeBron James. You're going to set up your own private family foundation that is a registered charity with the IRS, and you're going to donate that $20,000 remaining to your private foundation.
Okay, hold on 1 second. I got another comment. This is one loot. He says, Musk, Gates, etc. They own nothing. They control their trusts that own everything. Got it? That's what he says. Is that true? Do you know if that's true or not?
Yeah. Own nothing, but control everything.
Oh, I like that.
Yeah.
Own nothing, but control everything. I'm in. I like that one. I'm going to do that. All right.
Yeah.
All right. So I'm sorry. I didn't mean to cut you off.
Go ahead.
I didn't mean to cut you off. I just want to make sure that the audience was with us. That's all. Keep going.
Absolutely. Absolutely. So then that means a family trust has zero taxable income. The family trust is
Wow.
paying
So
zero
we
in
went
tax.
down 4 levels, and so far there's zero taxable income in all 3 of them. Now we're down to the
Correct.
last one.
Right.
Okay. I
So
like it.
then,
By the way, guys, if you want to hear more from Jerome, he has a lot of stuff he talks about, not just trust. We did a show last month, probably another one next month. Head over to megaschool.me/hello. Do that and check out what Jerome is doing. Okay, so now we're at the last one. I did my last 20K that I have left over. I put it into my private foundation, which I set up as a 501c3. Now,
right.
this I set up. Do I own that personally, or does someone else own that?
You own that.
I do own it.
Your
Okay.
entity.
So the 2 things that I own is the LLC with the business trust as my partner, and the private foundation. Those 2 things I actually own.
Well, you're being very specific, so I'll be specific as well.
Please. Yes.
You are the trustee of the business trust. You are the trustee of the family trust.
Got
the
it.
Foundation is actually a trust as well, and you are the trustee of the foundation as well.
Got it. Thank you. Okay, that's clear. So the foundation is actually a trust also.
Correct.
Got it. Okay, so the only thing I own at all is an LLC that makes no money.
Correct.
So I own an LLC that has no profit, and I'm a partner with the business trust. Everything else, I'm a trustee.
Correct.
Got it. Okay, great. Keep going.
So that foundation received $20,000 from the family trust. Okay, there's only one main requirement of a foundation: 5% needs to go to a charitable endeavor. So it can go towards a 501c3 organization, which could be your own 501c3 organization, or it can go to some sort of charitable cause like cleaning up the park. Okay, so 5% of 20,000 is 1,000. That's going to go toward, it could go to Boy Scouts, Girl Scouts, whatever. All right. What do you do with the rest of the $19,000? It is invested tax-free in perpetuity.
Okay, so let me give you 2 parts here. So my last 20K, right, goes to my private foundation. With that private foundation, I got to take 5% of that and give it to a charity.
Yes.
That's basically my tax.
Yes. Yes.
So the 5% tax you're talking about is actually way less than 5%.
Correct.
It's only 5% on whatever's remaining.
Correct.
So I made my $150,000 in revenue.
Right.
Out of that, $100,000 was profit.
Yes.
So I'm actually only paying in this scenario 1% tax.
That's correct.
I'm not paying 5%. You
Correct.
oversold it. I was like, you undersold it. You undersold it, Jerome. You undersold it. I'm actually paying 1% tax in this case. Okay.
Correct.
So I take that 1% and I'm not giving it to the government. I'm giving it to something that I believe in, whatever that thing is.
Yes. Which could be
I think a lot of people would be very happy if they're not paying any actual tax to the government and get to give 1% of their profit to a thing they want. I think a lot of people would be happy about that, right? They'd be like, oh my God, wait, no tax, but I can give 1% to whatever. A church I love, or the Boy Scouts, or some other charity, some maybe wants to help out some cause I care about. That's a good deal.
Yeah. Yeah.
All right. So now, okay, I got that part now. Now, I want to be clear. This must be done, I'm assuming, yearly, not like quarterly or something, right? This is a yearly event.
In terms of the donation to the charity.
Yep.
Yeah. Well, definitely annually. It needs to be
annually. Got it. Okay. So it has to be done by the time I do my taxes.
Right.
Okay. Understood. All right. So this is a yearly thing that I'm looking at. So because my point is, if I'm running my LLC, I'm getting money from January through December, whatever that time period is, right? So at one point, I've got to decide how much money did I make and how much is going to the trust and how much is profit, right? I got to do it monthly, quarterly, yearly, something like that, right? That's my issue is when do I do this? When do I make the actual K1 transfer to the business trust? Is this every month, every quarter?
Oh, definitely every month, because the reason why the business trust can pay the expenses, unless you're using credit, which is another conversation. There's a great options for that as well. But the way they're able to pay their expenses is from the income from the LLC. the K1
Okay, so the
distribution from the
LLC is
LLC.
actually making a transfer every month, just transferring the money
Yeah,
right over every month.
yeah.
Got it. Okay. Okay. Got it. All right. So then when does the business trust then do the same thing? Does it then just transfer the to the family trust, or is that yearly, or is that when do you do that? When does
As
that actually
needed.
work?
Yeah, just as desired. It's
Okay.
up to the trustee to transfer, to distribute to the beneficiary, the family trust, at
Right.
any time.
So it could be monthly also. I could every
Yep,
month go through everything and go, okay, here's the money from the LLC going to
yep,
business trust. Here's money from business trust, paying off whatever my debts are, whatever those things are, whatever's left over goes to the family trust.
yes.
Now, what if at the end of any given year, there's money left in the business trust? Do you have to pay taxes on that?
Two things you can do. You can just distribute it to the family trust, or if you wanted to, it is up to the sole discretion of the trustee to make it what they call the corpus of the trust, which is simply the principal or seed money of the trust. And then basically you can defer taxes in perpetuity.
What
So
I'm saying
basically you
is,
can just
uh,
go
I'm
ahead.
talking about, okay, it's December.
Yeah.
And I've been doing my distribution to my family trust. And now I got whatever. I got $6,000 in my family trust left over. And I'm worried because I got bills coming in, right? And I don't know, do I want to hold some of that money over till January because I want to make sure I got enough money to pay my bills? Do I want to empty out and go to zero? Right? I'm concerned. So I think, you know what? I want to be safe. I want to keep some cash in the business trust in case expenses pop up that I'm unaware of or whatever. I want to be safe.
Yeah.
So I keep $5,000 in my trust, right?
Yes.
Over to January. Now that officially is going to be profit because I didn't use it to spend anything yet, and I didn't give it to my family trust. That $5,000 that I sat there because I was worried that bills might come, do I have to pay taxes on that?
So what you would do to accomplish that goal is you would take the $5,000 and you would allocate it to what's called the corpus of the trust, which means it's accounting wise is part of the seed money or the principal that the trust started with at its inception, at its creation. And
what if it didn't start with much money?
Say it again.
What if it didn't start with much money? What if it started with almost nothing?
It doesn't matter. If this is the key is that the trust is a contract, and whatever the trustee deems is legally binding. So if the trustee says that $5,000 is allocated towards the corpus, the principal, the seed, then that accounting wise is exactly what it is. That means if the IRS were to do an audit, they would acknowledge it as the principal, the seed, the corpus, and that will not be taxable.
So
that's black and white.
But does that mean now I can't spend that anymore? It's stuck in there forever?
No, you can spend it if the contract says you can spend it. So that's why not all trust providers are equal. The trust providers that I work with, they know how to use the proper contract legal language so that you can do anything that you need to do with the assets of the trust, including the corpus, the principal, the seed, if that makes sense.
Got it. Okay, let me grab a couple comments real fast. Sergeant Bone says, is this what the Bidens do through Delaware? I kid. Yes, it is, my friend. I know he's kidding, but it's true. One Loot says, I will follow you all. Do you happen to know, Jerome, who Dr. Kia Pruitt is?
No.
He says that Dr. Kia Pruitt is also talking about this.
Oh, great.
Yeah, so someone else is talking about this. And he goes on to say, I live in Europe. I don't know how to set this up here. So this person lives in Europe. Can you help someone who lives in Europe or no? Is this only American for you?
No, I could definitely help them. What I have expertise on, or really I should say who I'm connected with and have expertise on, is English common law. So if they have property that's under English common law, so that would be the United States, that would be, of course, the UK, Canada, Australia, this strategy works. So,
okay.
So everyone's situation is different, but it wouldn't hurt to have a conversation.
There we go. If you want to reach out to them at megaschool.me/hello. All right. So now I've got us all the way down to the private foundation piece. I've given my $1,000 to some charity that I care about. That's awesome. Good for me. Now you're saying got 19 grand to invest. What's that
Yes.
mean?
You can invest it in anything you like, precious metals, stocks, crypto, whatever. And all interest gained is received by the foundation tax-free in perpetuity.
Okay, hold on. So if the foundation invests,
Yes.
and it gets money back from the investment, meaning that does this have to be literally something that provides you, with a monthly stipend, or I can buy and sell and that profit's the same? Like, what does it matter if it gives? Does it matter how it gives me money?
No.
It doesn't matter. Okay.
No.
So however I make money on my investment, that money goes back to the private foundation in perpetuity
Correct.
for free.
So if I could just give a concrete example.
Please.
There's a program where you can lease precious metals and get a monthly return. So you're not selling the precious metals, but you can lease out precious metals with a monthly return. That's something the LLC, the business trust, the family trust, and the foundation, all four of those entities could take advantage of that as basically a passive revenue stream. So that's something that all four of those entities could take advantage of. For the foundation, it would just be a passive revenue stream.
So you take your 19K, you put it into some investment, in this case, something passive where you get a return every month, whatever that is, right? That money comes into the private foundation. Okay, so the private foundation starts making money.
Yes.
Don't I got to pay taxes on that?
No, because they found in the tax code, a foundation, any investments of the foundation, the interest or the yield is received into the foundation tax-free in perpetuity. That is what makes a foundation different than your vanilla 501c3 organization.
All right. So now the foundation gets all this cash. All right.
Yeah.
Can I just spend it? Can I buy a house with it? How do I do with the foundation now?
You can, because the foundation is also a trust. And so for all three of the business, family, and foundation trusts, we have a provision in the trust contract that says the trustee is a full-time live-in caretaker for the entity. They're on call 24/7, 24 hours a day, 7 days a week, 7 days a week, 365 days a year. And therefore, there are provisions for the trustee's lifestyle. So the foundation can pay for your rent, car payment, etc., college tuition, which is reasonable and ordinary and customary for a full-time, always on-call caretaker for the entity. So the answer to your question is a definitive black and white yes.
Wow. Okay. Wow. Okay. So I'm basically living off of the family trust and the foundation.
Yes.
Why do I need the family trust? I feel like I could do it all through the private foundation, couldn't I? Couldn't I just go business trust of private foundation?
Could. So everyone's situation, what they want is different. This I'll say generic example is rather robust. The only thing to consider with the foundation is that, remember when we were talking about federal, state, local? While the business and family, the business trust and the family trust are under English common law, the foundation is a statutory trust, but it's at the federal level, not the state level. So that's just the one thing to be aware of when you're making such a determination, Larry.
Okay, so I might want to go business trust, family trust, leave it at family trust. I might want to go business trust, get rid of family trust, go right to private foundation, or I might want to use all of them, depending upon my situation.
Correct. Not cookie cutter.
And it would seem the hardest part for this, to be full with you, is it's really like wrapping your head around not owning.
Yeah.
Right? Like most people say, no, I want to own the thing, right? Like it's cultural, I guess, maybe. I'm not sure, but like it's no, that, but Sergeant Palmer is right. A lot of people don't own anything. And the example I'll give is a whole bunch of these mega church preachers. Many of them actually take a vow of poverty. Many of them own nothing.
Vow of poverty. Nothing's in their name.
Yes.
But they still are riding around them cars and living in them houses. How's that possible?
They must be watching this show right now. That's what happened. They were watching the show.
So on paper, you're broke. On paper, you're eligible for food stamps.
Yep, absolutely. That makes a lot of sense. Yeah, literally, I could collect my Social Security because, right? Because I'm broke. So there we go. That's true. I'm gonna go get my Social Security in my Lamborghini. I'm gonna go pick it up.
Yep.
go pick up my check in my Bugatti. I like that. That's not bad. That's okay. I get how that works. So this seems like, I mean, my gut tells me to set this up, this is going to be some cash. Like I got to pay a lawyer a bunch of money to do all these things, don't I?
Yeah, the prices out there are kind of crazy. And it makes sense. They typically focus on the wealthy, and the actual price quotes that I've actually heard in the real world is 25,000, 30,000, 50,000.
That's what I figured.
But what I do is I take a holistic approach. I know for certain with $4,000 all in, there's a way to, using leverage, to be able to get this all set up. But truly, if I use all the tools in my toolbox, it only takes $250 to get started.
Wow. Okay.
But that's all the bells and whistles, using every trick that I know, quote unquote trick, but basically every single time tested strategy that's been used for over 100 years. It's more steps, but bottom line, that would be the cost. And so I have a class to walk people through end to end. Reach out to me direct to get more information about that. But basically, no matter what your situation is, you're ready to take advantage of getting in the process of getting it set up immediately.
I want to go one step further, though. And you said for people who are trying to make money. So my assumption then is, and I do this myself, I'm not employed by people, right? I have my entities sign contracts, right? Larry Sharpe doesn't get employed. My entities get, if that makes any sense, right? That's what I do. And I think that's also a cultural thing. Do you need this anymore? Can I take this down?
No, I think that's good. Yeah.
All right. So my other thing is, I think it's a cultural piece, right? I got to think about it. I now have to say, I don't want to personally be employed. I actually want to have my entities be employed so that I'm personally not making any money. My entities make money, right? Yeah. And it's how I tease people. I live in New York City, as you know, and somehow I've been able to raise 2 kids in New York City and never officially making more than 6 figures ever. I never made 6 figures or more ever. How can you do that? Because I already was kind of on board what you're talking about, but not to this level. But I kind of already knew. And again, nothing I've done is illegal. That's why I say it publicly.
Right.
I've all gone through accountants. Nothing's illegal. And one of my daughter's godfather, who passed away sadly, was an accountant. And he told me the same old thing you've heard before, which is tax evasion is illegal. Don't do it.
Right.
But tax avoidance is our job as an American citizen. Yeah. So I'm very open. I never have evaded tax ever. I never will. It's a crime. You should not do it. I do not advocate it at all.
Right.
Tax avoidance, though, that's legal.
Yes.
Tax avoidance is legal. Tax evasion is not. So I have tried my best to avoid tax. I have. But I've been worried about that. Plus, this is a second piece. A lot of people who you're talking to, who are watching now, I'm sure, have a spouse, right? Have a girlfriend, boyfriend, husband, wife, whatever the case may be. You can't just be on board yourself. You got to have them too. You got to have them on board too, or it's not going to work because they're going to feel like it's not right or something like that. So let me go on with my next piece, which goes right in line. If I have a boyfriend, girlfriend, husband, wife, whatever the case may be, I'm going to go with husband, wife. I have a husband or a wife. I have a spouse. By state law, we are connected, right? Okay. By state law, we are one entity, right? By state law, we are one entity. Yes. how does this work in a trust? Can I still have, say, her be the originator and me be the trustee? Or does state law kick and go, nah, 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 nah. You guys are the same. You can't play that game. Do you know if there's a difference, how that works?
My response is, if it seems great to you, steer away from it. Keep everything black and white.
Got
So
it.
for the
Okay.
originator, shoot, just have the lawyer who's writing up the contract be the originator. Like, keep it simple.
Oh,
Keep it
that's
black
even
and white.
easier.
Yeah.
That's even easier. Okay. So you're saying that if I have a spouse, I probably shouldn't involve the spouse in this case because it might become
1,000%.
gray. Because it could
Like,
become gray with that.
now, if the spouse is going to be the successor trustee or co-trustee, as the case
They
may
could be a successor trustee.
Yeah.
I see what you're saying. Okay.
Yeah.
So it could be me, and then if I'm incapacitated or I'm gone or something, then she could be the successor. Okay.
Absolutely.
So let me add the next piece if I can. The trusts are English common law. But if I write a will is state.
Mhm.
If the will says X, but the trust says Y, what happens?
Well, the will is for the trust providers that I work with. The will is always incorporated.
Oh, they're not
Like
separate.
Yeah, again, no gray areas. Always keep
Okay.
it black and white, and therefore they always have it's always a part of the same conversation. Two sides of the same coin. So, quote unquote.
Got it. Okay. So if I'm doing this trust thing, I should at the same time be looking at a will at the same time, making
Yes.
sure my will is either in line or rewrite my
Yes.
will or whatever is required. I have to have that too.
Correct.
All right. So last piece I add on top of that. A lot of people who are looking at this are looking at, okay, this is great for me to make cash now, but they're also worried about, so I just mentioned, what happens when I get hit by a bus? What happens when I get sick? Whatever, right? What happens when that happens? So do I have that also in the, like, life insurance? Is that also part of this or no? Like, does life insurance become now, does the beneficiary of my life insurance, should that be a trust also? Or should that still be a person?
It's up to you, but I would say what makes the most sense to me is that the sole beneficiary of the life insurance would be the trust. And then who has the keys of the kingdom? Who becomes the successor? Who is the successor trustee? Well, that's succession planning for your estate. So all those should be black and white, clearly aligned, so that the funds are in the control of who you want it to be and not
All
in
right.
the ownership of who you want it to be.
Last part that I'm concerned about, and that is, I'm going back to spouse again, because a lot of people are married, and people who are thinking about this, a lot of business owners are married or will become married, whatever the case may be. If this is an irrevocable trust, and I start it myself, and I'm younger, I'm not married, right? Whatever, or I'm divorced, I'm not married. And then later on I go, hey, I want to get married. I love this woman. I want to marry her. I can't change the trust, can I? Can I put her on later, or I can, or how does that work?
Right. If the original trust contract says the trustee can modify the trust, then they may.
But I thought it's irrevocable.
To the grantor. That doesn't mean the trustee can't. Yeah.
I misunderstood that. Okay, thank you for that clarification. I assumed that was for everybody.
No.
Okay, see, I learned something again. Okay, good. All right, I didn't know that. I thought that was for everybody. Okay, so if I decide I want to marry some lovely lady, and I want to now add her in to be the successor trustee or whatever the case may be, I can modify it and say, well, let's add her in.
Yes, as trustee.
Okay.
Yes.
So let's swap it. I'm married now. I love my wonderful, beautiful wife. We go through this, and then all of a sudden I don't love her no more. And all of a sudden we get divorced, but she's trustee or whatever. Now what happens?
Should have thought of that beforehand.
But
I'll tell you what,
love your honesty, Jerome. I love your honesty. I love it.
I'm single. For what we're talking about, this is a litmus test.
Okay, tell me.
If I'm interested in a woman, this is my litmus test to see how she thinks about money and how she thinks about generational wealth. and I let her respond to the information, and that tells me a lot.
So what if she goes, what if she says, Jerome, I love you and all, but if we get married, I need to be on that trust.
Well, I'm going to learn that in the first month of dating.
And what I'm saying is, what do you do now? I mean, to me, that actually seems to make sense from her point of view, right? She wants to make sure that any money you got, that if you drop dead, she's the wife, she gets it. But you could also see it as, how come you jumping in my business? I could see both sides of that.
Well, to me, I want to see what it reveals how their thinking is, the woman's thinking is, from my perspective. Okay. And so I know what I believe, spiritually, and how that relationship should be. Mm-hmm. This is her telling me indirectly how she believes spiritually how the relationship should be.
See, Luke just posted, he said gold digger. That's what he said. But I'm trying to give her respect too, right? If I'm her, right? I'm thinking of myself, if I'm her, and here I'm in love with this Jerome guy, he's gonna, go make his money, do his cool stuff. And then what happens when I decide I want to have babies with this guy, and I'm not gonna go off and have a massive career. So if this guy drops dead, I kind of want my cut. I got his kids, right? Is she gonna think that? I mean, right? And Luke says I'm a woman, so she says gold digger, and she's a woman. So all I'm saying is I get where she's coming from. Is all I'm saying. That's what I'm not saying you agree or not, but I think I would think the same way. You like, I don't care. She ain't getting cut.
Yeah,
I got it. She ain't getting cut. All right. Maybe you're gonna help her set up her own trust.
Yeah, there's that.
Maybe that.
And also, let's say my successor trustee was my brother. I may have a provision to make sure that there is a allowance or stipend for the mother of my children, even though we're.
Oh, okay. So that's how you could adjust it. So you could adjust the trust to say, hey, if I'm incapacitated, whatever, my mother takes over, he has a rule that says he has to take care of the mother of my children this way, that way.
Yes.
Okay, but hold on. Once he becomes a trustee, can he just change the rules?
If you say this rule cannot be altered, then they can't.
Oh, man, this sounds like this is like a whole full contract. This is like pages and pages long.
Yes.
That's why you tell me it could cost like 20 grand.
Right.
Got it. Okay. Yes. So I'm not going on LegalZoom for this.
No.
I'm not doing LegalZoom. All right. No. That's why I'm asking questions. I see where you're going with this. All right. I got it. Man, guys, if you like what you're hearing and you want to know more, please head over to megaschool.me/hello. This is the kind of stuff that you're rarely going to hear about, this kind of stuff out here. And I really appreciate you coming on, Jerome, talking to me. Anything I missed, something we should be talking about that I might have missed?
No, I think that was good on trust. To be honest, this is actually this is like the tip of the iceberg. So I call it Trust Fund My Baby. It's the class I'm gonna be rolling out. It's saying, how would you have a 1 month old? How would you get this started for them? So there's a lot of creative ways to make sure you can afford this now and get starting with it now, because people, they need it now. And so, yeah.
All right. So if someone wants to go to that class, they go to megaschool.me/hello. Is that correct?
Yeah. And then just reach out directly to me. My number's on there.
There we go. There it is, guys. Thank you so much. Jerome, thanks so much for coming on. I appreciate it.
Absolutely. It's been great.
All right, guys. Thank you for coming in and hanging out with my Shark Talk number 3, my Rumble exclusive. We'll be doing another one of these real soon. I'll let you know, and I will see you all very soon.